Welcome to the Retirement Made Easy podcast. I'm your host, Greg Gonzalez. My goal for the podcast is to help you live a better life in retirement by giving you the tools and information you need in a language that you can understand. This is episode number 51. I created this podcast almost a year ago this week. Next week will be episode 52. That will be our 1-year anniversary for the Retirement Made Easy podcast. But I created this podcast originally to help people because I was seeing so many mistakes that people were making, whether it's investing, Social Security, maybe it's Medicare selection, all these different items and decisions that people come across and are faced with as they're approaching retirement. And so I thought the podcast would give me an opportunity to help those listeners out there that are planning for their own successful retirement and going through that transition. And yes, I'm a financial advisor in St. Louis, Missouri, with clients in almost 20 different states. So I get to help people plan for their own dream successful retirement. So what better way to help those other people out there that may not be yet clients plan and have the wisdom and arm them with the information and knowledge that they need to make better choices. This particular podcast, this episode, I wanted to talk about the biggest investment mistake that I see people make. And it's a very dangerous mistake when it comes to their investments and the investment decisions and choices, selections that they make. I think sometimes people forget short term why they're making these investments in the first place, what these investments are actually for. And with their serious money, which I'm going to call their retirement life savings, sometimes they do some goofy things. So we're going to talk about that on today's episode of the Retirement Made Easy podcast, the most dangerous thing that I see people do with their investments. But before we get into today's topic, I wanted to remind listeners there are a ton of resources that are free, that are available on my website, retirementmadeeasypodcast.com. Under the resources tab, you're going to find my 2021 tax planning guide. You're going to find my retirement secret sauce, as well as my couple's guide to a dream retirement. And I've had a couple people comment and tell me that they're really surprised that I have these resources for free right on my website. So you've got really no excuse not to download these and not to utilize them because it doesn't cost you anything. And I even have one of my clients who was actually a listener of the podcast originally, and hopefully still listens, but he said, gosh, Greg, you give away so many things for free right on your website. I mean, he was just amazed. And the reason being, I had a candid conversation with him. His name's Rob. I said, Rob, if I charge for these resources, people probably wouldn't implement them. They wouldn't use them. They wouldn't buy them. But if I offer them for free, I'm really able to share the tools that I use with my own clients because my idea, my goal, my dream for this podcast was to help people plan for a successful retirement. And so I'm going to continue to make these resources available on my website, retirementmadeeasypodcast.com. For example, a few months ago, somebody asked me, hey, how do you put together a retirement spending budget? I don't know how much I spend. And I said, well, there's a lot of different ways to do that. So not only did I do a podcast episode devoted to that topic, but I also included under the resources section of the website, our retirement budgeting tool, where you can download that for free, use it. It's very, very user-friendly. In fact, many of our own clients actually use that piece, the retirement budgeting tool, as well as a lot of people check out Dave Ramsey budgeting app called EveryDollar, which is free. So I will continue to come out with these pieces, with these tools to help you and offer them for free because I'm trying to make a difference in people's lives, and more specifically to listeners of this podcast. So check out my website, retirementmadeeasypodcast.com. If you have questions that I can help with, at the bottom of the website, you're not bugging me, I'm available. It says, ask Greg a question. You can submit your question right there. You can book a phone meeting with me, and I won't charge you a dime. I had a phone meeting, and I want to thank Tim. Won't say his last name, but he's from Nebraska, listener of the podcast. I had a very, very nice phone meeting with him, helping him out with his choices that he had run into when it came to his retirement planning. And he was amazed that I would spend the kind of time on the phone with him and never charge him a dime. And he said, why do you do that? I don't understand. I think he was amazed that I wasn't trying to sell him something or steer him some direction. And what I replied back to him, I said, Tim, listen, there's people out there who see you as a dollar sign, and there's other people that just want to help because this is their passion in life, this particular topic, whatever it is. And mine happens to be retirement planning, right? So if I can help, visit my website, retirementmadeeasypodcast.com. There's other people out there, financial advisors or financial planners, that will just see you as a dollar sign. I see people as people. And how can I help? How can I serve? That's why I was put on this earth. So let's jump into today's topic, which is the most dangerous mistake that I see people making with their investments. And I see this all the time, especially when there's a hot topic or a fad, so to speak. I'll give you a couple examples. Most recently, you had the AMC, the movie theater stock, going up and up and up, or Bitcoin, or these cryptocurrencies that you're hearing so much about in the news. Have you heard about the stock called GameStop? Or maybe your brother-in-law told you that he has gold. He owns a lot of gold. And right now, the price of gold is almost $1,900 an ounce right now. It's $1,893 at the making of this podcast. And he has made such a killing, and now's the time to buy, he says, or maybe it's your neighbor or colleague. And I think based on all the media, whether it's MSNBC or the coverage of these stocks and the headlines, I think it really confuses people and it gets them. Maybe it stirs a little greed in them. Like, gosh, I'm missing out on that. I'm missing out on those easy gains, so to speak, right? And maybe it's a sense of jealousy when they're hearing other people are making a lot of money in a certain investment, like a stock or Bitcoin or something like that. And many times, if not most of the time, people hear these get-rich schemes, whether that's an investment opportunity, a business, or something like that. But today I'm talking about investments and taking investment advice from people who are not qualified to be giving that advice. Maybe it's a brother-in-law or someone like that. It could even be a neighbor that is telling you about a hot stock. This is the most dangerous investment mistake that I have seen people make. Let me tell you, the elevator to success is broken. You have to use the stairs. If I can give any advice to the investors out there and the people that are investing their life savings that are earmarked for your retirement, the golden years of your life, you have saved and sacrificed and invested for all these years. This is your serious money that I'm talking about. I'm not talking about play money or maybe a little brokerage account where you have $300. I'm talking about your serious retirement savings. I encourage you, all listeners, don't get suckered in to these headlines or hot stock tips or whatever they may be. But the advice I want to get across on this episode is what should be the determining factors of how you invest your retirement nest egg. All this money that you've saved and sacrificed, the money that you're going to depend on for the golden years of your life. What are, again, the determining factors of how you should be investing that money? And it's not, because I heard a hot stock tip from somebody, or I got this news of this new stock through the grapevine. In my opinion, that's ridiculous and that's dangerous, and that's how you're going to get yourself into trouble. But what I can say is there are factors that I look at for my own clients that are going to determine how those dollars should be invested. Number one is going to be your risk tolerance. And I'm giving you some of these factors, not in any particular order of importance or anything, but your risk tolerance. What we mean by that is your feelings towards risk. Do you lose sleep when you see your retirement account statements have lost money? That tells you that, hey, I don't have much risk tolerance. I need to be more conservative than somebody else. My portfolio needs to be invested, maybe a moderate or moderate conservative. Or do you not even care if one particular month to the next, your retirement nest egg drops a little bit in value and fluctuates because you have confidence in the long term? Maybe you're more risk averse than the example that I just gave about the person losing sleep. So you have to really decide, are you a conservative investor? Are you more maybe in the middle, like a moderate Or maybe you feel that you're a more aggressive investor and you have a high tolerance for volatility and risk. Another important factor that determines how your long-term retirement savings should be invested are your goals themselves. For example, maybe one of your goals is to help with your grandchildren's college education. Well, that tells me that, hey, 529 college savings plans might be an important piece to your overall investment strategy to help you accomplish those goals. Maybe one of your goals is to have an X amount of dollars of income you're drawing from your investments, your, let's say, 401k, Roth IRAs, that kind of thing, every month. Let's call it $2,000 a month. Okay, so you want to have an investment portfolio that is producing $2,000 a month for you. So what investments could help you accomplish that goal? Maybe one of your goals is that you want to have a very tax efficient portfolio. Okay, so depending on the investments that you put in your portfolios, that you put into place within those different retirement accounts and investment accounts, that's going to determine the tax efficiency that you have there. So you might want to exclude certain investments that are very tax inefficient. And next, another factor or consideration on how you should be selecting your investments is, of course, your own personal investment philosophies. Right? For example, Dave Ramsey. I'm a big Dave Ramsey follower. I'm a SmartVestor Pro. I tend to have personal investment philosophies that match Dave Ramsey's. However, I have some clients that don't share those same investment philosophies, but it's my job to determine what their particular investment philosophies are to help them put a portfolio together that matches it. For example, I know, historically speaking, and Dave Ramsey quotes this on many of his podcasts and radio shows, that gold as an investment is a commodity, right? Gold does not pay any interest. It does not pay you a dividend to hold on to it. So the only way you're going to make money on gold is if you buy low, sell high. If whenever you sell it, you're selling it for a higher price than you bought it. So if you look at the long-term trend for gold over 30 years, the average return of gold historically over a 30-year period is going to be about 2%. And that just doesn't cut it for me. So my investment philosophy, my personal investment philosophy, does not include gold in a long-term portfolio. Same with Dave Ramsey. We share the same thoughts. Another example is your values might dictate your investment choices within your portfolio. So some people, a very popular idea lately has been socially responsible investing. So a lot of people like to have that frame of mind when it comes to their investments. And so that's going to dictate what exact investment choices are aligned in their investment portfolio to match their values, right? Their family values, which happen to be, again, the social responsible investing idea. To kind of further explain the whole socially responsible investing idea is that it's looking for social changes. So investments that are going to make a future social change. That might be solar energy or something like that. And it also deals with companies that are unethical and excluding those different companies or mutual funds from your investment portfolio altogether. So certainly you want or at least most people want their portfolio, their investments of life savings to match their values and what they believe in, their own personal investment philosophies. And also along with that, same vein, so to speak, is do you understand, are these investments within your portfolio? Do you fully understand what they are, how they work? And could you explain it to somebody else? And that's an important factor to somebody like Warren Buffett. Warren Buffett never invested in anything that he didn't understand. So Bitcoin, he's not a huge proponent of Bitcoin because he can't explain it. And he doesn't recommend that people invest their hard-earned dollars into investments, stocks that they don't understand, right? So if you don't understand what it is you're actually investing in, you've got a problem. And that's really, really dangerous. And I think for the people that are throwing their money, hard-earned dollars into things like Bitcoin, all these cryptocurrencies that they don't really understand, maybe some people do, but a lot of people don't. And in my opinion, not understanding how your money is invested can be a recipe for disaster. So there's no need to go chasing after the next big thing. The best way, in my opinion, is to have an investment portfolio that is long-term focused, goal-focused, matches your risk tolerance, is aligned with your personal investment philosophies and values, and structured in a way that you understand how it's invested, how your money's invested. And that will give you the confidence that you're looking for. And you can just put blinders on or just zone out when you hear somebody talking about the next investment fad or the stock tip of the week, or whatever it happens to be. That's not for you. That's for the person trying to make a quick buck. And most often, in my experience, the person trying to make a quick buck is going to get themselves in trouble 9 times out of 10 down the road, if they haven't already. Your serious money, which is earmarked to fund the golden years of your life, which we all call retirement, the good years. Every day is a Saturday, right? Those serious dollars needed to be invested prudently based on you and what makes your goals and future so unique. Forget about your brother, your sister, your colleagues, and how they're investing their money. That's on them because their goals, their risk tolerance, their investment philosophy, their values are different than yours. So their investment portfolio, therefore, should not match yours. So whatever they're doing doesn't impact you at all. You have your own plan. And if you need help designing your portfolio and those investments that are going to get you to where you want to be in retirement and provide that life that you dream of, well, that's what sitting down with a certified financial planner or having that conversation with a qualified fiduciary is all about. That's where that's going to be valuable. Don't talk to your brother-in-law or colleagues or someone like that. Talk to a professional. Someone who's going to be in your corner and understand you, your goals, and your dreams for a better future. I hope this episode of the Retirement Made Easy podcast has been helpful. Again, ignore all that noise of all those hot stock tips. Focus on you. Focus on your serious money for retirement. And while you're at it, I would invite you to go to my website, Retirement Made Easy Podcast, and download under the Resources tab my Couple's Guide to a Dream Retirement. If you're single, download the guide and just fill in the one section for you. I guarantee that will improve your path to retirement, and you can thank me one day. So check that out, retirementmadeeasypodcast.com. I'm Greg Gonzalez, and remember, always dream big. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, please consult your attorney, tax advisor, or financial advisor prior to investing. This is a hypothetical example and is not representative of any specific investment. Your results may vary. All performance referenced is historical and is no guarantee of future results. All indices mentioned are unmanaged and may not be invested into directly. The SmartVestor program is a directory of investment professionals. Neither Dave Ramsey nor SmartVestor are affiliates of St. Louis Retirement Advisors or LPL Financial. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.